Welcome to Make Your Money Matter with Brad Barrett, the show that aims to change the way you think about wealth management. Brad is a certified financial advisor, established radio host, and author of Retire Right. He is a managing director and partner at One Capital Management, an SEC-registered investment advisory firm managing over $4 billion for clients across the nation. Brad and his team are dedicated to helping clients protect and preserve their assets so they can reach their investment and retirement goals. And now, your host of Make Your Money Matter, Brad Barrett.
What's up, everyone? Welcome to Make Your Money Matter. I'm your host, Brad Barrett. I'm also a managing director and partner here at One Capital Management, and I'm here each week to help you navigate your course in your financial journey because, after all, your money matters. Friends, today I'm going to talk about something that is probably one of the more popular topics right now in the world of investing. Things of non-fungible tokens, or we know them as NFTs, SPACs, we know them as special purpose acquisition companies, and ultimately cryptocurrency. Now, this is not a show where I'm going to be talking about the do's and don'ts or what to buy or not to buy or any of those debunking videos. I know many of you have been asking me, Brad, when are you going to address the topic of crypto? Well, this may not be what you expect, but this is going to be a high level, but very, very important. Let's get into it. So I want to start off this topic with a little story and some background. In January of 2018, a man named Kell found himself in a bidding war at an auction that would basically alter the landscape of alternative investing. He had actually told an outlet called Know Your Meme, he said this: after we get past the $10,000 range, the crowd just freaks out every time someone says something. Now, here's what I mean by that. After Kell's $39,000 bid, the auctioneer counted down and declared the item sold. But a problem arose when Kell reached the stage and found the other bidder standing there believing he had won. The crowd noise was so deafening, neither could actually hear the other's bid. Essentially, a coin flip would decide the winner. You got to imagine the tension peaked here, and Kell ended up winning. What do you think he got for his trouble? A non-fungible token, what we know now as an NFT, of none other than Homer Pepe. You're like, what? Homer Pepe is a morph between the Simpsons character, Homer, and Pepe the Frog, a cartoon character that basically inspired a myriad of internet memes. It's a digital token, so it's not tangible. It's not like a painting or baseball cards. In fact, you could take a moment now and actually hop online and you can copy and paste the Homer Pepe image. It's not a tangible thing. But NFTs are entered into a blockchain, such as Bitcoin or Ether, and we'll talk about that in a second. They're decentralized and unchangeable registries of digital transactions. So when this coin flip went his way, Kell became the owner of the Homer Pepe. And the image you may have copied and pasted is the same as every Mona Lisa out there at the Louvre. It's a replica. If you're unfamiliar with NFTs, you might be scoffing. I mean, after all, the value of this investment, unlike stocks, isn't based on any real world events. And you wouldn't be alone. Kell even said himself, I got laughed at for a long time after this purchase, but in my head, I was like, I can't be the only one in the world to want this. When I read this story, by the way, I was like, you definitely, man, are the only one who wants this image. But he was actually proven right not too long ago, about a year ago, when his Homer Pepe was sold for $312,000. For a service charge and a gas fee, which is fuel used to the process, you too can actually create an NFT. That's the whole point of bringing this up today. Jack Dorsey, the old CEO of Twitter, famously sold his first tweet, easily found on the internet. You and I can both Google this, but he sold it as an NFT for close to, brace yourself here, $3 million. And an NFT doesn't have to be visual. This is the best part of the story. A Brooklyn filmmaker sold a 52-minute audio recording of farts. You heard me right, farts. And all these recordings of his farts were amassed during the COVID lockdown. He sold it for $85. I'll give you a minute to collect yourself on that, okay? Like many investments, NFTs are purchased because buyers believe someone will eventually pay more for them than they did. Now, unlike most investments, it relies heavily on sentiment and takes speculation to new heights. So this, to me, as why I'm bringing this up, it breeds excitement and it breeds fear. And maybe the reason we're getting so many questions about NFTs as well as other alternative asset classes like cryptos and SPACs. You've likely heard of the former, a unique digital algorithm, cryptocurrency, that's logged and verified on blockchain that can be bought and sold and traded quickly and safely. You might not know, however, there's an emerging belief that it could become the new gold. Cryptos, as many of you know, are untethered from government actions and policies, which to some minds make them an ideal hedge against uncertainty, which has been gold's long time and current role. So, given the scads of money that governments have spent on pandemic relief, running massive deficit spending, there's certainly an appeal to a currency that can't be printed with reckless abandon. For anyone watching right now who's a crypto fan, you're like, yeah, I like this guy. But the world of crypto, let's be honest, is mostly unregulated, which is the ideal position for it. It's why it's got such a following, and anonymous, making it an ideal way to fund nefarious activities. SPACs, on the other hand, and looking at that for a second, which are, again, special purpose acquisition companies, are companies with no existing business operations. They are generally formed by investors with an expertise in a specific industry to raise money, maybe through an IPO, to buy an existing company. What makes investing in the IPO risky is the company doesn't identify the actual targeted acquisition. It's basically a leap of faith, in our opinions, which is why SPACs are often referred to as blank check companies. Most individual investors aren't equipped to identify and choose the crackerjack management team behind the SPACs, which adds to the risk. The liability insurance rates for SPACs are skyrocketing. Coverage to indemnify a SPAC's directors and officers has grown, get this, to more than $1 million, up from about a quarter of that over the last few years. I mean, under various names, SPACs have been around a long time, but have come back in vogue. There's actually about 300 launched last year, raising almost $100 billion, more than all of the year prior. And there are many reasons alternative asset classes have taken off. One of those, to our mind, is that we look at bond markets a little while ago, central bank stimulus, everything from interest rates and conversations. And consequently, we look at our cash, which is just recently, this year in 2022, the yields have come, close to where we need them to be, essentially. And in response, I think many investors have looked to other areas and other sources of return by adding more equity, lengthening maturities. They're willing to hold, unwise in our estimation, but they're willing to hold or adding to slightly more risky, high yield, lower quality assets and investing in these alternatives. And again, what I want to share here and pause for a second is cryptocurrencies, SPACs, NFTs, by nature, we understand here that they are alternative asset classes. We get that. And they're here to stay. Their popularity, however, in our opinion, is likely to wane as the attractiveness of traditional assets. I know I sound like a traditionalist here in saying this, but it might wane a little bit when you look at bonds returns to normal, equities return to normal, and with the vaccines like last year steadily rolling out, much of the world's populace is easing back into everyday life, and this huge government spending and growth in the near future could be the best in post-war history if we look at it. So now, while these high-risk opportunities aren't a focus of our investment strategies here at One Capital Management, we constantly keep an eye on them, and that's why I want to share it on the Make Your Money Matter show today, and ultimately their evolutions. Meanwhile, if I'm being completely candid, we're going to keep employing the time-tested methods we've always used for our portfolios. But I do want to share when it comes to cryptos, because we know we're in the space out there in the investing world, and it's talked about a lot. Here's how I liken it. If you think of a car as your analogy, as your portfolio, right now, and for a lot of this year, and even last year, and the past couple of years in particular with the pandemic, cryptocurrencies, these algorithms, everything from Bitcoin to Litecoin to Ethereum, if you look at them, they're high right now. And you look at value, it's a different way to value a cryptocurrency than you would value a stock. But if you think of a car as an analogy being your portfolio, it might be a passenger in the car, but it doesn't necessarily need to be the driver. And what I mean by that is we're paying driver's seat costs or prices for what really should be a backseat investment. I mean, in your investment pool, you should have cash, bonds, equities, real estate, alternative asset classes, which is where SPACs, NFTs, cryptocurrencies come in. But I think what I've noticed, especially in the younger generation, I've talked to a lot of advisors like this that have talked to their clients too, it's almost like that became the next, mutual fund. And like that's now where every asset is going to. And what I'm here to say is we understand it's an asset class. And we would actually argue, and it's even set up this way because of the closed-end system. And the libertarian in me loves that. I love the fact that we can remove the central bank from it and having monetary policy be affected by a federal government. I'm for that. I actually get that notion. But again, we said this earlier, like it's still the number one place for nefarious activities. And my other point is, until it won't have to be pegged back to a fiat currency, ultimately to be able to be used in the economy, once it becomes widespread, then it becomes more of an attractive asset class from an everyday use. It's no different than owning Bank of America when you actually bank at Bank of America, right? If you own the cryptocurrency or you own Bitcoin and you actually can use it everywhere, it becomes a little more useful, right? Meanwhile, it's still just an investment. And my point of the car analogy I'm bringing up is, as an advisor of nearly 20 years, it's okay to have it in the car. What I'm sharing is, it doesn't necessarily need to be in the front seat or even on the driver's seat. Understand that it could be a part of your overall asset allocation, but it doesn't need to be, the thing.
Stay connected. Get frequent updates on the show. Follow Brad Barrett and Make Your Money Matter on most social media platforms. And catch full episodes of Make Your Money Matter streaming now on our YouTube channel. To schedule your no-obligation appointment, go to onecapital.com or call 805-410-5454.
And this goes to my point I've always shared here as an advisor is, you want to have a diversified portfolio, not necessarily a concentrated portfolio. Now, Buffett, who I love, always, and I quote him constantly on this show, he's definitely a believer in concentration, and I think that's a great thing. And I say, you can do that too. You can concentrate your assets and your investments solely in cryptocurrency or solely in the equity markets or solely in bonds, whatever you want to choose, right? But what he's done for like 80 years of his life is he literally lives in the same house he grew up in. He drinks a soda every day. He has the same hamburger every day. You want to do that and not really spend the money? Yeah, you can be a billionaire too, probably, and get concentrated in one position, study it, learn it, don't listen to outside noise. Great, go for it. But likely you're not wanting to be in that camp. So when it comes to cryptocurrencies or NFTs, it's kind of like the shiny thing. That's kind of the new thing nowadays. And I'm not saying it's wrong. Don't get me wrong here, okay? Just know it, understand it. I have a lot of friends and colleagues that I know study it, understand it, get it, and I'm good with that. I think the ones that scare me a little bit when it's like I'm looking at cryptocurrency, I'm like, but do you understand it? Do you know it? And I'd say the same thing if you were looking at XYZ company as a stock. Do you truly understand what it does, how it makes money, how it works for profit, why you would make money by investing it and buying it for $10, how it's going to go to $12 or $15? Do you understand that? If you don't, partner with someone who does. That's where an advisor comes in, right? That's the whole point here. And I shared the story about Peter Kell, and if you look it up, because that's oddly, my grandfather always told me, something you own, whether it's a house, a car, jewelry, whatever it is, it's only worth what another person will pay for it. And NFTs are a great example of that. Same thing with SPACs, same things with cryptocurrencies. Think with anything you own, it's only worth what another person will pay for it. So, when we put value on something, you have to understand the economic data behind supply and demand. And in the cryptocurrency world, the beauty of it is it's a closed-end system. There's no more, Bitcoins being added. That's it. It's just more increase of dollars of the amount of Bitcoins that it's worth. And so for me personally, I don't own any cryptocurrencies. And I share that with people simply to say that it's not something that I personally want to invest in. We here at the firm do not invest in cryptocurrencies. Of the $4.5 billion that we manage, we don't currently invest in cryptocurrencies. That's never to say never, but as I mentioned before, we are going to use our time-tested, true asset allocation and asset classes to make sure we drive the value for our clients. Many clients over many years now have brought up cryptocurrencies, and my answer is this. Definitely can be a part of the portfolio. We understand it, wouldn't be under our advisement or management, but it's no different than investing in a watch maybe, or something other asset area that you like, you're entertained by. That's okay. There's value there. I'm not saying you can't drive value over there. I'm just saying know it and understand it. I guess my ultimate theory today on the show around SPACs and NFTs and cryptocurrency, I kind of lump them together because they're all of note in the past couple of years and they're all a little more of the alternative asset class environment, is understand it. And that's, by the way, true of anything you invest in. Understand what you're investing in. And again, if you don't understand it, find someone who does and work with them and build trust with them. Just have discernment in who you choose, but that matters. And so I know, as I mentioned at the top of the show, it wasn't going to be something where it's like the do's and don'ts and these doom and gloomers who say cryptocurrency is the worst and these guys saying cryptocurrency is the next world currency. I mean, look, the reality is it's an asset class that's out there. It's probably here to stay, all right? And it's important to make sure it goes into context with your other investments. It doesn't necessarily need to be the only investment. And as dumb as my analogy might be, think of your portfolio and you're investing like a car. Does it need to be the driver? Probably not. So understand that where does it fit in that car? How much are you willing to pay for it? And how much are you willing to allocate over there? And again, that's also where you partner with someone to make sure that you can help walk through these items here when it comes to anything like that, NFTs, SPACs, cryptocurrencies. Okay, it's time to answer your questions. If you have a question or topic you'd like me to address, you can leave a comment or a question in the comments section, or if it's something a bit more personal, just go to the About page on this channel and send us an email. We'll always keep the questions I read here anonymous. Never have to worry about your name being shared, but we would love to hear from you. And this week's question, obviously, is around cryptocurrency. If I'm looking at cryptocurrency, which one should I be looking at? The thing about cryptocurrency is kind of funny, right? We know mainstream media of a few, Litecoin, Bitcoin, Ethereum. I mean, I can look up others, but those are the ones that come top of my head right now. There's like 200 of them. I don't know the exact number, but there's like 200 algorithms out there. That to me right there is interesting. Just side note for a second. I don't have a good answer for that, and I normally don't say that on the Make Your Money Matter show, because the reality is it's not something I invest in personally. It's not something that we as a firm invest in. I think, by and large, again, whether you choose those three I mentioned, Bitcoin, Litecoin, or Ethereum, or any of the other 197 or 200 of them, however many are out there, knowing what you're investing in. Again, this goes past cryptocurrency. It's for everything. Knowing what you're investing in, understanding it, and then understanding the risks involved. I think a lot of times if we're really candid and honest with ourselves, two things are going on emotionally when it comes to cryptocurrency. We think it's, we have to get in on this train because it's going to be the next big thing and you don't want to miss it. Or B, it's part of A, but B is you don't want to be left out. You want to be of the cool kids, if you will, and everyone's talking about it and you got to have it. If you don't, you're kind of out to lunch or something like that. And I think you got to be careful there, right? Because sometimes, as we know in life, what's right isn't always popular, and what's popular isn't always right. And so I think it's really important when you look at any kind of investment, but specifically about cryptocurrency in this question is, just know what you're getting into, read it, understand it, research it, and then understand the risk to it. So I know, again, it's not a very great answer directly on that, but I wanted to share that what I've seen, and I guess I'm bringing a lot of my advisory to this, for many, many years now, is I don't care if it's cryptocurrency or something else. When something's talked about that much and it has such a hold on people, and I know it's been around for longer than a couple of years, but the past couple of years it's really ramped up given what's gone on in the world. Be careful you're not doing it out of emotions and out of those things I mentioned, out of just being a part of the crowd or, this crowd mentality, which is a very researched topic of psychology when it comes to money. Really make sure it's right for you. That's what I really want to say. Whatever it is, whichever one of those algorithms you choose, make sure it's right for you. And make sure you also have, believe in diversification versus concentration. I know that's kind of a very vanilla answer and a vanilla commentary on that, but I stand by it. I think it's warranted. Again, if you have a question or comment you would like me to read here, you can leave it in the comment section, or again, you can email us in the About page on our channel. And before you go, if you found anything helpful today and want to learn more, you can visit our website at onecapital.com. You can also call or text us. We want to help. Listen, there's no pressure here. We don't treat people like a number. In fact, we value the relationships. It's the lifeblood of what we do. So click call or text us today. And if you're not following us on social media, you should be. You can follow us at Make Your Money Matter. We're sharing great information on all of our social media platforms. And as I often say, if you like the show, share it with someone you like. And I guess if you don't like the show, share it with someone you don't like. But until next week, always remember, make your money matter.
The information in this show is educational and general in nature and does not take into consideration a listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.